want you to subscribe, turn on the notification button, and so that you can keep receiving videos from us. Well, there's this new series I'm starting here for new beginners in Forex, or those that want to know about Forex. That's a uh, um, that's a beginner's guide to Forex. You're looking for people who have met me, ask me questions like, when do you exist a trade? When do you enter a trade? When do you know the best time to enter a trade? When do you trade in the market? What do you trade in the market? What are candlesticks? What are trend lines? What are time frames? A lot of stuffs about Forex are just so complicating to them, and they don't know what to do. And well, lots of videos there on YouTube do not speak mostly about this. And I'm going to take my time, have it in series by series. This is the first episode, so I want you to subscribe and turn on the notification channel button and keep getting videos like this. So let's kick off immediately. Introduction to Forex for new beginners or for those that want to learn Forex and be perfect in it. As you can see, this is a support and resistance level. Or rather, no, let's start from a smaller thing. Well, what is Forex? In Forex, what you do in Forex is to know when to buy or sell. When to buy or sell. That's just what you do. Here, look at this. This market have been selling. Selling. Selling is represented by red candlesticks. Red candlesticks. While buying is represented by green candlesticks most of the times. Mostly is in the settings, and I love to set mine like that. You can put yours as the standard settings for most Forex traders. As you can see, it's bar up green, bar down red. Sorry, bear candle, bull candle, bull. Of course, okay, bull. Know that a bullish trend is an uptrend. An uptrend is a buying trend. I will explain. Just know that if you want to set it, your bull candle should be green, your bear candle should be red. This is what I'm talking about. Look, these are red. Look at this now. This is a downtrend because from here, let's draw the line. Let's draw a trend line. From here, first of all, before you trade Forex market, you must know the trend of the market. So it's very important. Look at this here. From here, the market has been selling. So what do you call this? You call this a bearish market. I will repeat again. You call it a bearish market. Either you call it a bearish market or you call it a downtrend. A downtrend. Remember, a downtrend. Bearish market or downtrend. That is, downtrend means that it is selling. It is selling. As you can see, it is selling. It is selling. It's not buying. It is selling. Now look at this case. When it is buying, like it did here, when it started to buy, what do you now call it? You don't say you don't. Either you call it an uptrend, which is the main stuff to say. Either you call it an uptrend. I don't know if you're listening. Either you call it an uptrend or you call it a bullish market. A bullish market. And then you can see that there are more of the bullish candlesticks, more of the green candlesticks than that of the red. Here's a blue candlestick. A green candlestick, like we had to set in the settings. Remember, so there are more of these green candlesticks more than the red. That is to say that the green candlesticks has more power over the red, and that is to say that this is a what? A bullish trend. A bullish trend. This is a bullish. Everything here is a bullish trend. Do know that. So we've learned something. When market is going down, you call it a downtrend. You call it what? A downtrend. Or you call it a bearish market. When it's going up like it did here, you call it what? An uptrend or a bullish trend. and then these are bullish candlesticks. Talking about candlesticks, so let's go to candlesticks, or rather before that, another way to find the trend of a market without necessarily drawing the line, like I did, is to go to your settings, come to indicators, go to your indicators, indicators, main window, moving average. It tells you the trend of the market. As you can see, it's moving up. You can add a second moving average line to confirm the trend of the market for you. Let's make here 20, simple exponential, done. And this is what you're having. Sorry, let's change the line. Sorry, let's change this to 20, 30, change this to blue, save. Sorry, it's not, it didn't work like that. Change this to blue, save. Sorry, moving averages. I don't normally use indicators. I don't believe in indicators, and I will advise you do so too, but it's nice. As you can see, this can also be a strategy. It's also a strategy. Once the line cross here, you buy the market, and you can see how it bought and bought and bought and bought and bought and bought until there was a cross here, and the cross here it started ranging, and again started buying, cross here and all those. But no, do know that most indicators are lagging indicators, so I don't use indicators. But you can put your moving averages just to confirm the trend of the market, or you use this is what is called trend line. This stuff that is moving now is what is called trend line. It is used to know the trend of the market. So let's delete our indicators because I don't need them. I don't work with indicators. With time, you shouldn't be working with indicators. You should know how to draw a trend line. In the upcoming video episode, so I'm going to tell you guys how to draw trend lines, or rather episode 3 or thereabout, I'm going to talk about drawing trend lines and how to draw trend lines. So let's go to candlesticks, since you know that now that a downtrend is called a bearish market, and then an uptrend a bullish market. Bearish in the sense that the reds have more power over the blue, over the green, like we had to set in the settings. Well, let's go to time frames, market time frames. So in your mobile phone, you're going to be having this. You're going to have 1 minute time frame, 5 minute time frame, 15 minutes time frame, 30 minutes time frame, 1 hour time frame, 4 hours time frame. This H4 4 hours, H1 1 hour, M30 30 minutes, M15 15 minutes, and so on. D1 day 1 time frame, that's 1 day. W1 1 week time frame. MN 1 month time frame. So Forex is a very sweet something. I want you to know that it's not hard. Just subscribe, turn on the notification bell, and you keep getting videos, and you learn markets and trade like a pro very soon. So we've talked about this and then this. And what are these time frames for? These time frames. Now know that this is a 1 minute time frame. A 1 minute time frame means that one candlestick. These are candlesticks. These stuffs here are candlesticks. One candlestick in a 1 minute time frame. Just one candlestick in a 1 minute time frame is 1 minute. Is formed in 1 minute. I say that this candlestick here is formed in 1 minute, and this one here, this little one, is formed in 1 minute. This one is formed in 1 minute. This one is formed in 1 minute. This one is formed in 1 minute, and all those. But then in 5 minute time frame, is to say that one candlestick is formed in 5 minutes. 15 minutes time frame, one candlestick formed in 15 minutes. 30 minutes time frame, one candlestick formed in 30 minutes. So most of the times you may see people write time frame as TF. Don't get confused. It's still the same thing. So let's just quickly move over to what the time frames are for. This is in 1 minute time frame. In 1 minute time frame. In 1 minute time frame. Since each candlestick is formed in 1 minute, if I have one, if I have 1, 2, 3, 4, 5 candlestick. If I have 1, 2, 3, 4, 5 candlestick, these are, that means that 5 candlestick in 1 minute time frame forms one candlestick in 15-minute time frame. I repeat, 5 candlesticks like this: 1, 2, 3, 4, 5. 5 candlesticks, 1, 2, 3, 4, 5 in 1 minute time frame. We can check it now. Just is formed. It forms one candlestick in 5 minute time frame. I go again. All I'm saying is that 5 candlestick in 1 minute time frame forms one candlestick in 5 minute time frame, and 3 candlesticks in 5 minutes time frame forms one candlestick in 15 minutes time frame, and then 2 candlesticks in 15-minute time frame forms one candlestick in 30 minutes time frame, and then 2 candlesticks in 30 minutes time frame forms one candlestick in 1 hour time frame. And that's how the thing goes, and it goes and it goes and it goes on like that. So that is that for candlesticks. Then next thing we're going to talk about is, what do you trade in the forex market? What do you trade? Now, there are 3 things you trade in the forex market. You either trade the currency pairs, or you trade the indices, also known as financial STP for derive, or you trade the stock. This is what I'm talking about. What I'm having here is what is called indices. Volatility 75S, 7500, VIX 100, VIX SP, VIX 51S, VIX this, boom and crash. All these are indices, range, and all those. Then if you want to trade, okay, there are also step indices like step index. Now if you want to trade currency pairs, this is what you have there: audio card, Australian dollar versus Canadian dollar; audio chef, Australian dollar versus Swiss francs; Australian dollar versus Japanese yen; audio nens, Australian dollar versus New Zealand dollar. All these are currency pairs. You can trade any one that you want. There are metals also to trade: silver versus US dollar, gold versus US dollar. There are lots of stuffs to trade in the forex market: CFDX indices, many things to trade in the forex market. A lot of things to trade in the forex market. The forex market is wide to many people. And one thing you need to know is that in currency pairs works within the working days of the month of the week, from Monday to Friday, and then market closes till Monday again. But in indices like binary.com, drive.com, boom and crash, V75 1s, and all those things, you can trade any one that you want. You can trade anytime that you want. So in the next video, we're going to talk about sniper entries: when to enter a trade, when to exit the market, the lot size to use, what to trade on, how to trade best, proper risk management, and all those. So remember to subscribe and turn on the notification bell for more videos. Thanks for watching. This is Let's Make Derive Group.